Everyone wants to be independent. No burdens, living adventures, playing by your own rules. Many people dream to travel around the world and move from one place to another. But not you. Your dream is to have your own house, work from there, and do what you love. One day, you walk around the neighborhood, looking at the houses for sale. You always do that. You walk until the end of the road, and there it is. The perfect house. The best style, best color, best look, and the worst price. You dream big, but your wallet is not big enough. You'd love to stay more, but it's so frustrating looking at something you can't have. Your smile disappears, and you're about to go home when someone approaches you. It's a young couple. You notice the rings on their fingers, their happy smile, and the enthusiastic attitude. They just got married, and they're looking for their first house too. They ask you for information about houses in the area. Is this a good neighborhood? Are there good schools? Where can we go for a holiday nearby? The more you listen to them, the more you realize a crucial point. You know a lot about houses. You also know that information is power, and knowing the real estate market can make you earn good money. You decide that your job will be investing in the real estate market, buying houses with potential at a low price, and selling them for a big profit. In this way, one day you'll be able to afford the house of your dreams. But just like many other businesses out there, the real estate market is a speculative one. It means it's a bet. You have to consider many factors. Which factors? Well, you'll be surprised to find out how many they are. Stick around to discover more. Before we continue, I'd like to know, are you getting any value so far? If you are, kindly like this video. And if you're new, welcome, and go ahead and click subscribe. All done? Good. Let's move on. The land and the structure. What's inside a house? No, I don't mean bedrooms, the kitchen, and your treadmill. I mean, what makes a house valuable on an economic level? To answer this question, just look at a house. Really, what do you see? Simply put, you'll see the roof, walls, the porch, windows. All this fun stuff is called the structure. You might have heard that a house is valued per square foot. After all, it's easy math. If a house is valued at $200 a square foot and you have a property of 2,500 square foot, the value of the house will be $500,000. Other things to consider about the structure are the numbers of bedrooms, bathrooms, and the general condition of the property. Does the house have less than 20 years? Was the property well maintained? Are the systems brand new and there are no moisture stains going on? If the answer is yes, then the house will have a higher value. And that's it. We could stop the video here. After all, aren't these factors that a family would consider in order to buy a house? Surely they are. But as an investor, your purpose isn't just to buy a house. You're here to invest and make good money out of it. Most of the time, investors buy a house just to immediately sell it when the price goes up. This is called house flipping, and it gives you fast profits. Some investors own hundreds of houses without living there. In some cases, they don't even own the actual property. That said, there's another thing to consider, and it's more important than the entire structure itself. You see, a house isn't floating in the air. What's underneath it? And no, once again, I'm not referring to your basement where you play the drum dreaming of becoming a rock star one day. I'm talking about the block of dirt the house sits on. That is the land. So here's the thing, the land is more valuable than the entire structure. It might be a stunning mansion with 5 bedrooms, 6 bathrooms, and a jacuzzi on each floor. But like any economic good, just like a car, a phone, or a pen, it tends to depreciate over time. It falls apart and it falls out of style. This is maybe the most important concept of the real estate market. But if a structure loses value over time, how can it be a good investment? That's a great question, and once again, the answer is in the land. Land is a limited supply. After all, we can't produce any more earth, and as the world population rises, so does the demand for new land. Real estate investors know that. They consider a lot of different things about the land to offset the depreciation of the structure. Choosing the best location determines if the investment will be profitable or a total train wreck. The best thing to help you with that is to ask yourself questions. So today, you'll learn the 3 most important questions real estate investors ask themselves before investing money in a property. Employment. In the early 2000s, big oil fields were discovered in Shell Valley in North Dakota. If you don't know where it is, just think about a cold place in the middle of nowhere. The new oil industry created an incredible amount of new jobs. people started to migrate into the rural lands of North Dakota. The population in a few years passed from 620,000 to almost 700,000. Of course, those people had to live somewhere, but there was a shortage of houses and apartments. What does it mean for the real estate market? Basically, a load of cash. New houses, new apartments, new condos, but especially higher prices. Let's now leave the freezing lands of North America lit up by thousands of intense flames of the incinerators. Let's go to the hot and sunny shores of Puerto Rico. Ah, isn't that way better? Well, the answer is no, at least if you're a real estate investor. Almost 50% of the population live in poverty. Finding jobs is becoming more and more difficult, and companies are closing. It may be a tropical paradise, but no job means no people moving into an area, so you'll hardly find someone to sell your house to. Of course, these two examples are the extreme cases, but this might make you realize how much job opportunities matter in the real estate market. Even if remote working will be more and more relevant in the next few years, people mostly live near where they work. Just think about where you live. Is it near to your job? It probably is, or maybe it's the same for a member of your family. So here's the first question you have to ask yourself. Can people easily find jobs in the area where I want to invest? If the answer is yeah, sure, it's full of big companies and industries that offer a lot of jobs, then investing in the real estate market is a good idea. Otherwise, think twice. How to understand if the job opportunities are rising or going down? The first and most important thing is to observe. Ask the employment office. There are agencies that work on national, state, and even local level. Ask them questions, and most importantly, try to understand trends. Maybe they'll say that job opportunities are pretty good at the moment, but you find out the year before they were almost double. You'll notice a digression, and that's an alarm for you. Maybe you buy a house now, and in 1 year there will be no jobs. Tourism. Of course, jobs are not the only thing to consider. People love to travel and discover new places to fall in love with. We all know how the pandemic hit the travel and tourism industry in the last year. Will it be better in the future? It's hard to predict. Many investors are betting that the vaccination campaign will work, and they're returning to invest in areas well known for tourist attractions. The truth is that tourism has always influenced the real estate market. Take, for example, Aspen in Colorado. Another cold place in the mountains, but it's one of the most famous touristic locations in the United States. Families go there to spend the winter skiing and enjoying hot chocolate in their holiday houses. Here's the second question you can ask yourself. Is the area where I want to invest a well-known tourist destination? Will it be relevant in the future? Supply. It's easy to say, yeah, that's a great place for tourists and it's full of new job opportunities. So maybe you decide to invest in a house there, and then you discover that the market is saturated. The supply is the number of total houses available in a certain area. It's the same old concept of the offer and the demand. If there are a lot of houses, the price goes down, especially if there are people not willing to buy them. Let's go over an example to understand this crucial point. Let's say you're in a beautiful seaside location. Everywhere you turn, there are high-end properties and luxury mansions. You know how rich people like to have exclusive things, so maybe they decide they don't like that place anymore? They move away from there to buy holiday houses somewhere else. The result? There are a lot of luxury properties, and no one is willing to buy them. The market is saturated. Does this mean we absolutely don't have to invest in the real estate market in that area? Actually, no. Maybe we discover a new big company has just opened 10 miles nearby. There are hundreds of new jobs available, so hundreds of workers are looking to buy or rent a house. Of course, they won't buy those expensive mansions. They're looking for more affordable options. So while the supply of luxury properties is high, there's a shortage of first-time houses. Investing in that slice of the market could be the best opportunity for you. Third question, what's the supply of houses for every price range in the area where I want to invest? To find that out, you can typically read the reports of your local board of realtors. You can also confront the prices with a deep research on the web. Neighborhood. It's now clear the most important things to consider depends on the value of the land the house sits on. But think about this for a second. You've just bought a new house. It's in a good location near where you work, and you're very happy with your choice. The second day in your new house, you decide to go out for a run, but as soon as you step foot outside, an angry old man starts yelling at you. He's concerned about the height of your hedges. It is 6 inches above the standard. It's against the law. I'm going to report you. Ah, that funny guy's your neighbor, and believe it or not, he's influencing the price of your house. We all want to live in a place with good and open people. New home buyers with small children often avoid locations with older homeowners who will not provide playmates for their little ones. The average age of neighbors provides clues to determine the price of a single house. Also, the proximity to services like schools, grocery stores, airports, and malls can influence the demand for houses in particular areas. So, to conclude the video, is housing a good investment? Well, yes, as long as you ask yourself these 3 questions. 1. Can people easily find jobs to afford housing prices in that area? 2. Is that location relevant for tourism and investors from abroad? 3. What's the supply of houses for every price range in that area? There will be many other questions coming with them, but if they all work out, then go ahead and invest. Just remember about trends. It's easy to understand how the situation of the market is at the moment, but how will it be in the future? You can find the answer in the past and start to find patterns. We hope you found value out of this video. If there are any other factors that you know, share them in the comments and help the community grow. With that said, have a great day, you guys, and I'll see you all in the next one.